Good morning, everyone, and happy Friday the 13th for you. This is the morning pre-market session for Quantum Leap. My name is Doug McKay. I am the founder and head moderator of Quantum Leap. Of course, Quantum Leap is coming up on our 5th anniversary. We are a private Skype group. We have a chat room that we do through Skype, and just retail traders helping retail traders. We call it a SOL, or a self-organized learning environment. If you're interested in checking it out, give me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And of course, everything's getting ported over to the new website, which will be stealthtrader.com, and you can send me an email at d.mckay@stealthtrader.com. Of course, if you have been in the room and you're interested in checking out the Stealth Analytics, go to stealthtrader.com and follow the prompts, and you can download a 30-day free trial. And we're going to be, focusing more and more on the analytics and the Stealth intuition amplifiers as we move forward and move over to the new website. Now, this morning is going to be a little bit different because I have not done any prep work, so you're actually going to see me going through, and I'm going to do this on the fly. I'm not going to be around. We're going to close the room down right after the session because I've got meetings downtown Toronto here this morning, so I'm not actually going to be around to call out trades. So before I do anything, of course, I got to get the good old legals out of the way, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Many trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. All right, so let's thought we'd start off this morning and just take a quick look at yesterday. Always good to look back, isn't it? And this is how I start my day when I'm doing my regular homework before you guys, I even come on to talk to you guys. So let me just bring up yesterday's chart. So yesterday we talked about the fact that we were going to be opening up in range but outside of value. The value area low yesterday was up here at 1935. And of course, remember that all numbers as of yesterday are over on September's contract. I rolled over on Wednesday night. So all the homework from yesterday and all my charts and everything are from the September contract. So we opened auction out of range, and my hypothesis was that we were going to trade both sides of these two trade zones, that we were going to test the range low and we were going to test the high, and the hypothesis was either get short off of the test of the value area low, or get long off of the test of the range, or take the break in either direction. And we opened it up and I said there's no trade inside of here because there's no edge, and we want edge. And so we just sort of chopped around here, missed the trade here, but then we caught the trade on the breakout. And then we basically came down to our next level at that 1927, which was the first target and an area that we were looking to do business, pushed through down to the target, almost hit. We missed it by a tick. A little bit sloppy, but we missed the target below 27 by a tick, rotated back up, tried to break back inside a range, and this is where I said to get short again. We rejected the 31, broke back below the VWAP, came down, tested that 27.75 again, came up, tested the VWAP, rejected the VWAP. This would have been the next short. And again, I was cautioning anybody to the long side, okay, all day, because we never really got back inside a range. Anytime you get outside a range, you've got to look for extension, okay, and initiative sellers stepping in and taking us down. And then this was a beautiful trade right here, and then we rotated all the way down to 24, tried to hold 24, couldn't hold it, and then continued on and just sort of chopped around until we came down to, which was our main target below that, 1875, and I'll show you guys why when we get onto the composite. And then pushed through to our next trade area, which was the 1675, missed it by 3 ticks again, front running us, and then we rotated back up and found balance and closed the day up here in around 24. So I mean, at no time in my view was a long. I mean, even Elaine asked me early on when I think it was well, she was trading the September contract, so it was 34.25, which would have been in around this I think 27, and she was asking about the stealth analytics, and she's new to interpreting it, and she said, well, is there long here? And I said, well, if you look at your gauges, everything was still, mid time frame, and long time frame was to the short side. It said you could take a quick scalp, but you really should be looking for an opportunity to stay short today and get short. And of course, from there we went down and hit that low target. So let's go into our homework and get that done. Of course, our year open nowhere near there, 1837.75. So we're in a bull year now. Our high we put in the June contract is 1954.75. That's been adjusted down. We'll take a look at the adjustment. Again, anytime you have a all-time high that's put in a prior month contract, there's a tendency to go up and retest that. Now, are we going to test it in the next couple of days? I don't know. I don't think so. But the point is, this has still got to be a target to the upside. And if we get up into a certain area, I'll show you where, then I think you've got to be targeting a move to equalize the 2 contracts out, the all-time high in September adjusted and the June contract. But all in all, our all-time high still is at 1954.75, because even though it's been adjusted down on this contract, I still consider whatever is the higher number to be the all-time high. Our month open is at 1921.25 on the June contract, and we're down there testing that. And this is where in rollover it gets a little bit confusing because of the fact that you've got June numbers you got to pay attention to, and September numbers you've got to pay attention to. So, but we do pay attention because the market has memory, and that's why I was looking at this 1918-15, because that was a key area that we had in the June contract as well. Our month high is the 1954.75, even though it's in the June contract, and our month low is 1913.75, even though it's in the June contract. So let's skip all the way over to our intraday numbers and start talking about June numbers. These are all June numbers now. I'm sorry, September numbers. So yesterday we opened the Globex at 1936.75, had a high of 1940.50 and a low of 1932.75. And then we had an RTH open at 1933.50. So we opened auction in range, tested that 35, then went down and broke the RTH previous session at 31.25. We had a break to the IB to one side, so it was a normal variation. We had a 4.25 point opening swing, and this was kind of tricky because the clues that they were giving us early on were kind of mixed. We were outside of value but inside a range. We had a little bit of OTF participation, but not much. We had a little bit of direction, in the delta, but not much. So it was kind of, and we had a wide opening swing. Now, this was a really wide opening swing. So sometimes when you get disparity in the opening swing, that usually, we talk about being above 2 points or greater. That will point to more to our rotational day because there's the disparity in perceived value. Sometimes when that perceived value is really great, you get the, one side gives up and you get the breakout. And that's exactly what happened yesterday. We fought between the bears and the bulls, and there was a wide, choppiness, and then all of a sudden the bulls gave up and the bears took over and the sellers took us down. Our initial balance high, 1934.75, one tick below the key area that we were watching, and initial balance low, 1928.75 for a, basically just under a 6-point value area. How did you get 5.99, Howard? Sorry, that should be 6, I believe. Our 1230 number, all our intraday numbers except for our VPOC, and it's only showing as a positive because there's a 0 here. Howard's been extremely busy, and Howard takes care of the sheet for me, but he's busy with some of the back testing, so we've got a little bit of some missed numbers here. But key point is all the RTH numbers were lower. 1925, 1934.75, 1750, and 23 1/4 on our close, and 1922 on our VPOC. Our 20-day ATRs, look at this. We get the 1-day expansion that breaks us out, the significant breakout candle that took us out of that balance, that 4-day balance that we were in, and then we start coiling again. So I still think we've got we've got some big moves on the way, and also because I'll show you in a minute. Our value area high 1930.50, our value area low 1920, and again the only reason they're showing as higher numbers is because for some reason the value area from the previous day was not in. And I think that's probably why he did it, because he's trying to start September contract, but I'll let him do that. Whoa. And then our RTH volume was 1.4, and our full session was 1.6. But what was really weird is last night, I want to just take a look at this because, again, I'm doing this on the fly, gang, so it's not going to be a normal session. See, it's 405 minutes. I got a problem with my IRT because my IRT is not giving me that volume. And I know we did more than 26,000 contracts. I got to take a look at my tick data. I'm going to have to do a full download there and see what's going on. But depends. Okay, and now I understand what it probably is. Depends because I'm tracking the September contract on my RTH, and Howard probably put the volume in for the June contract for the RTH. So that's most likely what the scenario is. So let's take a look at the trend. I always like to go macro to micro in terms of where we are in the trend. Monthly, very strong. We do have the technical gap that I've been talking about that's been created so far this month. All my EMA, all our moving averages are 9 EMA and 20 SMA. Always the same on my charts. So the trend is very much intact on the monthly still. On the weekly, you can see we talked about, the fact that we are creating this technical gap and we're coming down so far to, close it through time, but we still got ways to go. We still have a technical gap. But overall, the trend is still, strong on the weekly. On the daily, a little bit different story. We talked about this technical gap, and then on the 4-hour, wasn't yesterday, it was the day before, I said, well, we had that head and shoulder. Let me just show you the head and shoulders on the 4-hour. And I posted this in the Quantum Leap room. And the measured move on this, now, I originally posted this head and shoulders in the June contract because it was Wednesday that I noticed this pattern. But you can see there's the left shoulder, here's the head, here's the right shoulder. And the measured move on the June contract was 1935.75 or 1935.50, I believe. You can go back and scroll through the chat to get the actual chart that I posted in real time. But here's a beautiful, example of a nice head and shoulder pattern taking us down. And I said at the time, I said it's a 4-hour, so it might not happen today. We did get the move down on Wednesday, but we didn't get as big a move as I was anticipating. We only got down to, I think, 38 or something like that on Wednesday. But then, because it's on a 4-hour, we never went up and broke the right shoulder, so it was still valid. Okay, you got to let these patterns play out in the longer time frames, because 4 hours, is a pattern like that's going to go over a couple days, not just one day. So anyway, let's go over to the geometric chart. We talked about the fact that we'd come up to this energy point that we were watching, and we didn't quite get to it. It was 1955.50. We got to 1954.75. Again, 3 ticks. For some reason, they're front running all my analysis by 3 ticks on the big macro scale. But we said that we're likely, we had to watch whether or not we broke out of the short-term upward sloping fork above the center line of the long-term upward sloping fork, and then above the upper line of the intermediate upward sloping fork. And if we didn't, I said look for rotation back first to test the center line of the short-term fork that we put in last week, and then likely come down and test the lower line if we break through, and then come down. So right now, today, you want to watch for 2 things based on the geometric chart. You want to watch this level right here at 18.50, and if we break out of this smaller time frame upward sloping fork, we're likely to continue down from the upper line of the intermediate fork and then come down and test the center line. And that center line test will bring us down to 1904 area, 1904, 1904.50 area. So you want to watch that. If we bounce off of the lower line and we hold that 1850 level, look for a possible move today, up to retest the center line from below of the short-term upward sloping fork at 1941.25 thereabouts. So that's about all the information that this geometric chart is going to give us. So let's go take a look at our trends intraday coming into the market. On the 4-hour, you can see we've rolled over. You've got good slope and separation. We do have a technical gap on the 4-hour. We're closing it right now through time, but look for possibility in the RTH to come up and close it through price as well. Technical gaps are usually closed through consolidation, sideways move, and the EMA coming down through time to close the gap, or through price where the price moves up to catch the gap, and usually it's a combination of both. Right now we're just getting sideways movement, but this is a technical gap that needs to be closed before we do and make any further move. Going down to the 30-minute, you can see that we had the move down. Here's the spread from the June contract to the September contract. And then since then, we've just basically been going sideways consolidation, no real trend, although we're getting a little bit of a move up, and we're above the 9 and the 20 right now. Actually, this is a nice example of a naked cross close. And we crossed down, left the naked cross, and then came up and closed the naked cross on the last couple candles on the 30-minute. I won't even get into what my naked cross study is all about, but stick around. I usually talk about it at some point in time. Same thing on the 15-minute. No real trend. We're just going sideways, although we're getting some upward move. We're leaving a naked cross right now down here at 1922.50. So keep an eye on this. If this actually crosses over, it's going to be left naked down here at 22.50. On the 30-minute, I'm sorry, the 5-minute, a little bit of a different story. We've got the start of a trend. Okay, we've got slope and separation. It's a little bit of a parabolic move coming up into that 26. Remember that 26.25 level, trade level that we had on yesterday's chart? We're coming up and testing that from below. I'd be watching that level right now and how they trade on this if you want to catch a early morning trade. Right now, my hypothesis would be watch for rejection of this 26.25, 26.50, and because we're creating a bit of a technical gap right now on the 5-minute, so we're likely to either go sideways with a little bit of a a downward skew to it. You might catch a point or so, even before the open. So let's go over to the big picture and take a look at the composite. Oh, and before we do that, let's just go take a look at our daily report. So currently, right now, our full session high is being challenged at 1926.75, but it's still in place, and our full session low is 1919. When I say full session, it's the Globex, but it's still what we have within the full session high and low. So our ATR targets, 20-day ATR targets to the upside, 1931.25, and to the low side, 1914.25. Pay attention to your average true ranges right now, because we're starting to get. And I was talking about this the other day. We were coiling, and then we got that expansion in the Globex the other night, which I talked about the fact that they started leading the downward move, after that Bin Laden high, which I think was at 1373 or something like that, and the move started in the Globex, and then just the other night we had a double the average 20-day ATR in the Globex, which was the first expansion. Yesterday we got an expansion in the RTH. So we've got to pay attention to where those ATR targets are, and when you expand beyond them, look for the possibility of further expansion. News today, we had news at 7:30 Central, 8:30 Eastern, Canadian manufacturing and PPI and core PPI in the U.S., and the big one will be the U of M consumer sentiment at 8:55 Central, 9:55 Eastern. Remember, this is a subscription-based report, so you can get, I'd be careful in, even just before this time, because people might want to try to front run this. So let's go over to the composite and take a look at where we are in the big picture. Now, these have all been adjusted, to the September contract. So we were in the overall balance that we had, that was centered in around this, which is, sorry, I've got the wrong, that's the Russell. I thought it looked a little bit weird for me. There we go. It looks much cleaner. So we were in balance for the longest time, going back to that February 21st start date of the microcomposite VPOC that I was using. And we were in balance what was, 1865, which got adjusted down on the September contract to 1858. And we were chopping around there. And then we, went up and, accepted value, which was the the previous all-time high, which was at the 1898.50, which got adjusted to 1891.25, and then we moved up, broke out of the distribution zone in around the microcomposite VPOC and the composite VPOC, running back to October the 9th, 2013, and we accepted value, where they tried to hold value after. This is something you got to start paying attention to. When you go up and make new highs, new swing highs, and then you get consolidation zones, around there, okay? Just as when we watch, naked VPOCs and naked microcomposite VPOCs for areas where we're going to go look for buyers, okay? It's the same thing as when they're breaking out of a range, out of a distribution zone, and you're coming up, you want to know where they tried to hold value before. So I draw my microcomposites differently than other people do in volume profile for this exact reason. I want to know where, after we made a significant swing or a breakout of value, or even inside of a range, where they were consolidating and accepting value or trying to hold value. Because once we came up here and we tried to hold value in around this 1883.50. It was 1890.50 on the June contract. We went down. Where did we go? We went searching for buyers. Where did the buyers step in? Where the the microcomposite VPOC and the composite VPOC was we found those buyers, they came up. Where are they going to go? If they're going to break out of balance, where are they going to travel to look for sellers? They're going to go up to where they tried to hold value before. And then when you get there, you got to look to see if the sellers are stepping in or whether they accept that value. And once they accept that value, then you got to look to see, okay, are they going to break out? And what do? They break out. They come up here and they come up and they consolidate around these 2 days and create this CHVN. And I had a little microcomposite here, a 2-day, but I took it off because I'll tell you what I'm doing in a minute. But they accepted value at 1902, broke out of that value, came up, and then for 4 days we held value in around this 1914.50, which was 21.75, and that's why I was telling you that 21.75 is going to come into play again, because even though it's in the June contract, it does play against the market has memory. So we came up to 1914.50. We consolidated, we accepted value, and then we broke out, moved up, made the all-time high, and then they tried to hold value up in here around this 1939.25. So you want to keep an eye at this 1939.25. Now I've put a larger microcomposite on here because I wanted to see within this move up to go up and make these all-time new highs, where's the most accepted price? Is it in the upper distribution or is it in a lower distribution? And as you can see, if I bring this to the front, okay, let this come to the front. Try it this way. There we go. So within this, what I consider to be a bit of a blow-off top, within the blow-off top, the most accepted price is down here at 1914.50. What does that tell me? That tells me that if they can't hold up in the upper distribution and get above that 1927, and remember I said 27 is going to be a key line in the sand for us, because if they can't hold up to above 1927, then we're breaking down outside of this distribution below the 50% retracement of the significant breakout candle, and then likely to rotate down. When I said the first destination to look for buyers to step in would be down here at this 1918.50. It's now shifted to 1918.75 with the move that we had down there yesterday. But the key is, if they can't get back up above 27, okay, and they can't find buyers to take us up, where are they likely going to take us? Are they going to take us down to 18? Yeah. Are they going to find buyers there? Maybe. But more likely, they've already found the buyers with conviction at 1918.75. They're likely to come down further, because this is where, in this whole move up, that the buyers and sellers like to do business the most. So if they're searching for buyers with conviction, where are they likely to go? They're likely to come down here to the 1914.50. Okay? So key level right now, and the line in the sand above us, is this 1927. If we can't get above this 1927, okay, I would be looking for all the shorting opportunities that I can. I'd short rallies, okay, until we come down and test this 1914. And then at 1914, I think this is going to be the real test. If we come back down here and you don't see buyers with conviction stepping in here, then we're likely to push through and come down to test the other side of balance down here at 1906.25, which also happens to be the range low of the smaller microcomposite. And you can see the smaller microcomposite VPOC is also 1914.50. But we've got undetermined fair value within this distribution zone. So once we get down here, you're likely to get a lot of chop down here. And you'll probably play ping pong between all these undetermined fair values and 1875. So I'm expecting a lot of move as they mature the auction within this area between 24.25 and 1906 24.25, and this will likely end up as an area that we battle for a few days, if not longer, as they try to hold as the buyers and the bulls try to hold us up to take another run at this all-time high, which has been adjusted down to 1947.50. But remember, we have 1954.75 as the all-time high in the June contract. These two numbers, 47.50 and 54.75, I believe need to be equalized before we get a super big retracement and put in a long-term high. So until we break below the 1906 level, I'm still anticipating them holding us up here and then making another run at some point in time. So let's go over, and I know I'm doing more teaching than I am setting up for the trading day, but it's good for you guys, especially when I haven't prepared, to get an idea of what my reasoning is behind everything that I do. I mean, it's never good to blindly take levels and targets from somebody if you don't fully understand them. So hopefully that helps you out. So overnight so far, we've got a high at 26.75. Okay, could help if I have my right chart up. Our overnight high so far is 26.25. And our overnight low is 19. And our overnight VPOC, which I don't believe there's not enough volume up here to shift the VPOC overnight. So 22.50. All right, so we can get rid of this chart right now. Let's take a look at what we've got here. And again, I haven't done any prep work, so I'm doing this on the fly. All right, so we're currently trading inside of value and inside of range. So generally, you're gonna, and this is a pretty sloppy looking profile. And you've got, if I bring this profile to the front, you can see that the key LVN, okay, the lowest distribution point between the two upper and lower distributions. And I wouldn't really call this a double distribution. I call this ugly. But right here, this 24.75, I think is going to be your key level because it's the least accepted value within yesterday's RTH between the distribution. I mean, you get the real LVN for the day is down here at 1950. But right here at 24.75 is what I'd be looking for in terms of possible move down. And you're going to get this you see how flat the composite is right here? There's not a lot of volume there. So it's unmatured and undetermined fair value right here. There's just nothing there. So between this 24 and this 27, it's going to be, there's nothing there. It's ugliness. There's no edge. So what I would do is I'd be using 24.75 to 24.25, okay? And again, if you're going to take the long off of it, you got to be above 24.75. If you're going to take the short off of it, you got to be below 24.25. Below 24.25, I'd be looking for a rotation back down to the overnight VPOC and the naked VPOC, and the most traded price down here at 22, and then with a push through. And let me just send this to the back again. And our naked close, okay, from yesterday is 19.23.25. So if you get short off of 24.25, you want to make sure you get scaled your first fund off, okay, before the naked close at 23, and that'll be my first target below. All right, and then of course, if we get into the lower distribution, they're looking for buyers, so they're likely going to come down here and test this 22. So I mean, I just you want to be careful to get scaled just before the close, but you want to hold on and keep one running to the 22. And then if the buyers don't step in at 22, then we're likely to push through down to the value area low down here at 1920, and I'd be looking for an 80% rule at that point in time to play out. So this would be the first spot that I'd really look for responsive buyers to step in. But here's a big but. If we come down here to this 1920 and we haven't taken out the overnight high yet, 96% probability of taking out the overnight high, overnight low. Right now, the probability looks to the high side. But if we don't go up and take that overnight high up, and we break below 24 and come down towards this 22 and come down and test this 20, we're likely to blow through the 20 to take out the overnight low, and then I'd be looking for a push through to that 1875 and test the range low down here at 17. So you've got a bit of a confluence area down between this 1920 and 1750. And with the target below being the overnight low. I would take the overnight low one tick above the 1875 CHVN right here. And then look for them possibly push through 1750. Yeah, 9:30. So come down here at this 1750, but you've got the CLVN right here at 1675, and this is going to be a key level. So 1750, if they blow through value, I don't think they're going to hold range. So what I would do is I would actually wait to see how they test the 1675. And then if they take out 1675, my main target today below range and below value is going to be this 1450, and this is going to be an all-important test down here. Look for a bounce off of here, but if they don't bounce, okay, I'd be looking for a extension of range, and I'd be looking, sorry, one second. I'd be looking for, I can talk. I'd be looking for a move down to this 1906.25. And, you know, to me, I'm not going to put anything else in there before that. Because to me, down here, we've got this, and I keep talking about this, we've got this undetermined fair value within the lower microcomposite, the bigger microcomposite, and this this composite distribution zone. And you got, you know, 09.25, 1050, 1175, 1350, 1450. So do you want to even try to get into a trade here or do anything here? Or if, you know, if you're down here, you know, if you're not short by the time you're down here, all I would do is hang on and wait for to see if they come down at 1906.25 or get back up inside a range above 1750. There's nothing to do here but to hold on and wait, unless you want to take the bounce off of the 19. I think you get an initial bounce off the 1450, but it's a dangerous trade because where do you have to put your stop? If you're trying to get long off of 1450, where are you going to put your stop? You've got to put it below this 1906.25. And because, of course, below that you've got 1904, but the big number below will be this 1902, and of course the centennial number down at 1900. And I know I've taken all my time so far just doing this, but when you haven't done your homework prior to doing this, I'm doing my homework along with you, but I'm also trying to give you the reasoning why I'm thinking this. So let's look at the quick upside really quickly. I'm running out of time. 27 is you want to look for a push through to 27. They're likely to take out this overnight high on the open. I don't know if they've expanded it so far. I'll have to look at that. But above 27, then I'd be looking at targeting a move to test the value area high here at 1350, and that would be my next area. I'd look for responsive sellers to step in really between 30.50 and the CHVN up here at 31.25. So that's going to be a little bit of a slush zone. So the same thing. If you're waiting, if you're going to take a breakout trade, take it above 31 and a quarter. If you're going to take a reversion to the mean trade, I would be looking at coming down. But I think once we get above 27, you could get some expansion. We've got some juicy targets up here at 36, 36.50, 38, and 40 and a quarter. The first spot would be this 32 and a quarter. That would be my first target above, because that's where the CHVN was most of the day before it shifted down. I'm sorry, not the CHVN, the VPOC was most of the day before they came down and stole it just before the close. And then look for expansion up to test the range high at 34.75, and of course above that you've got 36 and 36.50 as your immediate targets, with 38. But the big number above is going to be this 39 and a quarter, because that's the most accepted price where they tried to hold value before we fell out. And so I'd be looking for them to go up and search for sellers up there. So my target and main target above range and above value is up here at 39 and a quarter. Come on. All right, and then you got the 40 and a quarter just above. And then once we're up here, gang, I'd expect them to start chopping around, hold value, and come up and try to take out this 1943.50 naked close. And then, of course, we've got the 1947.50, which is the all-time high adjusted in the September contract. And then you've got the 1954.75, which is the all-time high in the June contract. So that's what I'm looking for. I want to make one more comment, just because this is something, I always want to say these sessions are never good unless unless you guys take action. And yesterday morning we talked about, this has been adjusted here at 67, but yesterday it was 66. And I said to you, everybody, yesterday morning, go watch the video just before we closed out. If we break 1966, okay, in gold, then you've got $1,000 trade, okay, on a one lot. Get long above 66, because we're going to go up to 75, 76. And where did we go? We went right up to that 75.30, and then overnight we went up, and that breakout there was $1,000 trade on a one lot. You don't get those opportunities, and you've got to take advantage of these opportunities. I mean, that's easy money. Anyway, I just wanted to point that out. Right now we're holding in around the 75. Key line below us is 67.40. But if we continue to hold up here, look for them to retest the 77. If they break 77, again, you got a beautiful move, because then our 1293 is going to suck us up. That's the most. This composite goes back to 2008, and we did a lot of business up here. We found buyers down at the 1941 area that we were looking for when they broke out, and now that we've held and broken out, that's strong buyers stepping in. And with this move, this retracement that we're expecting in the indices, we are going to come up and test this 19. We're going to look for buyers in gold at 1293 area, as long as we hold above the 67. So we're going to take our time. It's not going to be overnight. It's not going to be in the next couple of days, unless we get a strong move down in the S&P and the other indices. But this move is going to come up and take us out at the 1293. And I've completely gone through the open. So I apologize for that. I don't even know where we opened at. Anyway, I got to run because I've got to be in a meeting in 25 minutes. I apologize. I run late. That'll conclude our morning session. Trade well, trade safe, and we'll catch you on the flip side.